Ladies and gentlemen, good day and welcome to Relaxo Footwears Limited Q2 FY24 conference call hosted by IDBI Capital Markets and Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Archana Gude from IDBI Capital Markets and Securities Limited. Thank you, and over to you, ma'am.
Thank you so much. Good evening, everyone. On behalf of IDBI Capital Markets and Securities Limited, I'd like to welcome you all to the Q2 FY24 post-results conference call of Relaxo Footwears Limited. From the management side, we have with us Mr. Ramesh Kumar Dua, Managing Director, Mr. Gaurav Dua, Full-Time Director, Mr. Ritesh Dua, Executive Vice President Finance, Mr. Sushil Batra, Chief Financial Officer, and Mr. Ankit Jain, Company Secretary. We begin the call with a brief discussion from the management, and then we can open the floor for Q&A. Thank you, and over to Sushil, sir.
Thank you, Archana. Good evening, everyone, and thank you for joining us on our Q2 FY24 earnings call to discuss the financial and operational performance of the company. We have already uploaded the earnings press release and investor presentation on the stock exchange as well as at our website, and hope you have had the opportunity to go through those. Before we begin the question and answer session, let me give some highlight on Q2 and H1 FY24 financial performance of the company, beginning with Q2. Revenue in Q2 FY24 was at rupees 715 crore, up 7% from rupees 670 crore in Q2 FY23. We witnessed strong demand during the quarter, which has led to a strong recovery in volume driven by open footwear. EBITDA recorded a strong 54% Y-on-Y growth at rupees 92 crore as against rupees 59 crore in the corresponding quarter of last year. Softening of raw material prices and better operational efficiency due to economies of scale enabled us to enhance our EBITDA margin by 392 basis points in this quarter. EBITDA margin was at 12.8% in Q2 FY24 as against 8.9% in Q2 FY23. PAT almost double in this quarter at rupees 44 crore as against rupees 22 crore in Q2 FY23. PAT margin stood at 6.2%, up 283 basis points from 3.3% in Q2 FY23. In H1 FY24, we recorded a revenue of rupees 1,454 crore, which is rupees 1,337 crore in H1 FY23, an increase of 9% year-on-year basis. EBITDA was at rupees 199 crore from rupees 146 crore in same period of last year, up by 37%. EBITDA margin was at 13.7% as compared to 10.9% in H1 FY23, an expansion of 280 basis points. PAT for H1 FY24 at rupees 101 crore against rupees 65 crore in H1 FY23 grew by 65%. PAT margin was at 6.9% as compared to 4.6% in H1 FY23. The company incurred a capex of 56 crore as on 31st September 23. We remain a net debt-free company with positive cash from operations. We remain committed to provide quality product as per evolving customer need with focus on premium and innovative products. We continue to expand our strong distribution network with a special emphasis on new channel and e-commerce. Thank you. Now we can open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Onkar Gutagare from Shree Investments. Please go ahead.
Good afternoon. My question is regarding last year you were talking about premiumization of
Onkar, your audio is sounding a bit distant.
Oh, am I clear?
Yes. Please go ahead.
I was asking about till last year you were talking about premiumization of the entire product category, but since last year you have taken price corrections. So exactly what kind of strategy you are looking at? Higher number of pairs to be sold and with less value, or other way around? That's the first question.
Ramesh Kumar Dua. Last year we did some price correction. Before that, we had lost some market share to competition. After price correction, we have regained our market share, so our volume growth has been more than 20%. As far as premiumization is concerned, focus is there in Sparx, in Bahamas, and already we are having a good traction of these premium articles. So that focus is there and it will continue.
But the loss of market share was due to higher prices of your products, or was there any other reason for that?
No, last year, because of higher, we had a lot of old stock, costly inventory in the system, because our industry operates on a lot of import materials. And we have to have a supply chain of around 6 months of that material. So that is why it took some time to consume. Meanwhile, the market rate had fallen. But now we have our inventory in the system, now it is comfortable.
So the second question is on the revenue of the company. So what kind of revenue you are expecting in the second half?
We are expecting a double-digit growth in the second half.
Okay. Just a last question on ROE and ROC, which has been falling from last 2-3 years. What's your strategy on that front?
Strategy, because the margins are under pressure. So once things will settle, so definitely ROE and ROI will be better, because then capacity utilization and more earning will be there, so that percentage will improve with the performance.
So regarding that, what kind of margins are sustainable? Now you have clarity on this.
In the next half, 14 plus EBITDA.
EBITDA 14%.
Yeah.
So you are expecting this margin in the upcoming quarters, or because the current margin is less than the margin which we are projecting?
Yeah, you are right. But when the volume go up, our sale go up, then H2 is going to be better than H1. So things will improve.
Yeah, due to operating leverage, you will gain the margin, right?
Automatically, because of operating leverage, our EBITDA will improve.
Okay, so what's the capacity utilization you are working at currently until at Q2? What was it, and what do you expect to be?
Currently, it is a 63% utilization.
Oh, that is for Q2 you are talking, right?
It's H1 we are talking about. It is around 63%.
Okay, so what kind of capacity utilization you see you will work with going forward?
So generally, it remains around 65%.
Okay, all right. Thank you.
Thank you. The next question is from the line of Ali Asghar Shakir from Motilal Oswal. Please go ahead.
Yeah, thank you so much for the opportunity. I had a question on your clothes footwear. So we had a very good, trade show, I think a couple of months back, where we had, displayed the entire range of our clothes sportswear. So I just wanted to understand a couple of things. First is, Q3 typically is your large quarter for sportswear. So how is the initial response and, what is the kind of demand and growth that we are seeing? Our composition of sportswear, I think, correct me if I'm wrong, is somewhere about 250-300 crores. So what kind of growth we expect? Our competitor has had a significant size, and I think we've also had aspiration to grow significantly. So do you think this is a category which can be somewhere close to like a 1,000 crore contributor to you in probably a few years? I'll stop here. Thank you.
Yeah, this is Gaurav Dua, and you are right that this category has huge potential to grow. And what you're saying, 1,000 crore, maybe in 2-3 years, we will definitely plan to grow to that level. And regarding the market situation, as you know, the market is still not picked up what we were expecting. So we have done a lot of retail meets across India and distributor meets. So the initial response, because of this Pitru Paksh and untimely rains, market has still not given us a good feedback till now in terms of uptake in the market. So it's too early. Diwali is in November, so we are expecting November should be better.
Got it. So, our base would be very low. So, of course, from that, base, we should see a very good, performance even in Q3. And just a follow-up over there is that, one feedback on the ground is that the margins in the sportswear is not very compelling, and therefore, Relaxo sportswear is not very well received by the distributors and retailers. So have we made any changes over there, and do you think we have addressed the issues at the distributor level?
No, so we have made no changes since last 4-5 years. And regarding distributors, they always complain about margin. That is their trade habit. They need more margins. So we having the fixed margin which we have not changed from last 5 years.
Even in the sportswear.
Yeah, it's same. We have not changed.
Got it. Okay. And in Q3, from the last year's base, do you think this quarter will, considering the kind of market weaknesses there, we should expect, things to only recover, after a couple of quarters? You think Q3, because of our low base, we can expect strong growth from sportswear?
So we are keeping our finger crossed, and last 7 months has not been so encouraging in terms of the uptake of this sports footwear. The market is still a little challenging. So we are just hoping for the best that this should now pick up. It's been 7 months, market is not responding.
Right. Got it. Thank you. This is very helpful.
Thank you. Before we take the next question, reminder to our participants, please enter star and 1 to ask a question. The next question is from the line of Yash More from RV Investments. Please go ahead.
Good evening, sir. My first question is regarding the market share. You said we have gained the lost market share. So what's the current market share?
In volume, if we talk about at the company level, last year we lost around 20-25% in volume. Drop was there in the open footwear, which calls Hawaii and Flight. That only we have regained it back. So there is a 27% in H1 growth in volume. You can see that. What share we lost last year, we have gained it back.
Okay. And regarding the FTA, do we see any benefits from the UK FTA?
And can you repeat the question? It's not clear.
I was asking about the UK FTA. What's the position? What's our position? And what are we doing regarding the FTA? What benefit do we see?
Sorry, we not able to understand your question. What you are saying, FDI, UK FDI, but just please. Mr. Yes, can you repeat the question?
Yeah, sure. what I'm asking is, what are our benefits with relation to FTA, with the UK FTA?
Talking about a free trade agreement with UK?
Yes, yes.
No, not much. Not much. Because, these European markets or the UK market had been more, in footwear side could be more for leather footwear.
Okay.
But we are more into non-leather footwear.
Mostly.
So that's why it may not be
Any impact on us or effect.
Okay, sir. Okay. Thank you.
Thank you. The next question is from the line of Abhishek Getam from Alpha Invesco. Please go ahead.
Thank you, sir. Am I audible?
Slightly, there's a background disturbance, Abhishek. Please come closer to the mic and then speak.
Yeah. This is better?
Yes, go ahead,
Hello?
please. Yes.
Yeah. So my question was regarding premiumization strategy. So largely our open footwear are sub 200 ASP. So what are our plans going ahead to, bring whole portfolio level or footwear level to a higher ASP? I mean, sort of the whole company portfolio in the range of 500 plus ASP. And, what strategy would we go for? I mean, tier 1 or tier 2, 3?
So, if you remember, we have taken the last price cut or rationalized price in September. So since then, the prices were less. Now, if you see October, that ASP has increased. And regarding the premiumization, we have brands like in flight, we have launched Urban Basic, which is again 400 plus MRP. And we are working on the portfolio of Sparx, which is more than 1,000 to 1,500 MRP. So we are continuously working on our portfolio to increase increase the ASP and improve on premiumization.
Understood. So what part would be 500 plus ASP contributing to our revenues?
20%, 10%. It's roughly around 10%.
10%. And so where do we see this to achieve? How involved in terms? And do we see this to improve this 50% sort of in a longer term horizon, 5 year plus?
No.
Okay.
Our 80% as on date business comes from open footwear.
Right.
Company is focused on serving masses. 20% is coming from our the closed footwear.
Right.
So that is why average comes out low. But our focus is there on premiumization, whether it is Bahamas, Flight or Sparx. So maybe 20% of that will ultimately build up premium.
Right. So down the line, like 4-5 years down the line, we can expect it to 30-35% sort of contribution.
So we have to see how the thing, what kind of traction we get from these categories.
Right, sir. Right. Okay. Thank you, sir. That's all.
Thank you. The next question is from the line of Priyank Chheda from Vallum Capital. Please go ahead.
Hi. Thanks for the opportunity. So there's an observation where your volumes have remained flat over the quarters since COVID at an average of 45-50 million pairs per quarter. And this has been the trend for the sector also. It's not only pertaining to Relaxo as such. Can you help us understand why the volumes haven't picked at the consumer levels? What are the key factors, that's driving such a muted demand?
See, there was an up and down since COVID, the first wave, second wave, third wave. So things have not stabilized. And then the price increase was there in 2022-23 because of war. So it's been like last 3-4 years, the industry has been facing a lot of turmoils. Now this year, we were expecting that the industry will grow, but last 6-7 months are not that. There's no sign of, huge uptake in the market because of, again, untimely rains, inflation pressure in rural India. So that's why the industry is struggling to grow to that level.
So if I have to again summarize, the price increases that you saw in FY23 led to a poor demand in volumes, and then again in FY24, the volume pickup hasn't been seen yet.
Yes, you're right. That's why we are able to get that volume back of 30% growth.
Got it. So there has been a BIS standards that has been implemented in the footwear. If you can help us, what would be the implication for us as well as for the industry? How do you see this shaping up for the industry as well?
Yeah, it is going to become mandatory from January. January 24. So whatever products we are making, specifications of that government has number of times revised. Now we are working on that, meeting the specification, and we are quite ready to follow these government regulations from January.
Does this mean, sir, that a lot of China footwear imports will get reduced? And if you can help us quantify how much would be China imports in footwear, which would not fall under this BIS standards?
No. Even whatever goods will be coming to our country, everything has to be as per BIS standards. Nothing will come out of this.
Got it. So would this mean that a lot of unorganized players who would not be able to cater these standards would lose out market share and in turn be beneficial for brands like you?
We think so.
Okay. So just a bookkeeping question on a Sparx brand sales, if you can help us on an annualized basis, what would be the Sparx brand sales? And that's the question.
Around 37 to 30, between 35 to 40% share will go to Sparx brand.
And within that, what would be the closed and open sandals and sports shoes breakup roughly?
Overall, 20% is our closed footwear and 80% is our open footwear.
And in Sparx, it is 50-50, 50 open, 50 closed.
50 is closed footwear. All right. Thanks a lot, sir. Thank you for answering all the questions.
Thank you. The next question is on the line of Manan Madnani from Kamaya Cap Wealth Management. Please go ahead.
Hi. Thanks for the opportunity, sir. So my question is around our raw material side. So what kind of scenario are you seeing?
At the moment, for the last few months, prices have stabilized by and large.
Okay. So going forward, do we expect gradual gross margin improvement from here onwards?
Yeah, ultimately, always we have to be watchful of the market conditions, competition, outage, and keep our prices competitive. And we keep on watching this every quarter by quarter. And when the volume grows, automatically our margin also grows along with it. At the moment, for the past 6 months or so, situation has been quite challenging. Sentiments are low, particularly from rural markets, mass segment. But with the volume growth, our margin will definitely improve further.
Okay. And sir, we were doing some channel check and we realized that there is some price difference across majorly all categories between our EBOs and our website. So what is the strategy behind that?
No. We have one price only across all channels.
Okay. So we might have to check it again because we were doing some channel checks and there was some...
One article, we have one price throughout India across all channels.
Okay, sir. Okay. Yeah, that's it from my side. Thank you so much.
Thank you. The next question is from the line of Ankit Kedia from Phillip Capital. Please go ahead.
Thank you. So my first question is regarding the price action. Given that the underlying demand in mass segment is, currently subdued, and given that the RM cost is on a declining or a stable trajectory, can we say that price action, be it upwards or downwards, is not behind, and this price stability will come in the market? Or, in next 2 quarters, if the demand doesn't revive, you could take some price correction as well, to gain market share?
So we are not going to take any more price correction because raw material prices has been stabilized. And we don't see that there is an increase in any raw material price. So our focus is on distribution expansion.
Sure. And so on distribution expansion, we are going for direct reach now. So if you can just give some color today where we are, and in next, 1 year, 2 year, what is the target, what we are looking at?
So, there's quite in India we have a lot of white spaces, across the country. So we are going to have a secondary focus, secondary driven sales approach rather than primary push. So there is a whole strategy working behind it, how to increase our footprints across India.
So can you elaborate on this strategy? It will help us understand the business better.
So we have discussed earlier also that there are 1 lakh outlets, MBO outlets in India. So currently we are at 65,000 outlets. So every year we are going to add more and more outlets to grow.
Sure. So my second question is regarding EVA and PU. Are you seeing both these, products seeing some pressure, or, EVA is doing better than PU, and PU is where, there is some impact of demand?
No, we are seeing both are growing equally. And I think both have good future. So it's not like one is going, one is not good.
Sure. And so my last question is, colored Hawaii versus non-colored Hawaii. In colored Hawaii, we have seen more competition from Aqualite, Walkero and others, while in non-colored, we are pretty much the market leader. So anything, we are doing on colored Hawaii to gain market share?
So as you know, we have a brand called Bahamas, which is in colored Hawaii.
Right.
So, and we are growing well in that category. Last year there was a struggle because of huge MRP. Now it has been cleared, the old stock has been cleared, and we are able to get the market share back.
And so what will be a Bahamas contribution? If you can give us growth, between the brands, it would be helpful. Between what was the Sparx growth for the quarter, half year versus Bahamas and Flight?
So if I talk about volume, in Hawaii and Bahamas both, it's upward of 20%, the volume growth we have done.
So even the company volume growth is pretty much, in the same trajectory. So where is the pressure coming from? Because at the company level, we have done 23% volume growth order.
Pressure is coming from, it's more of like a Sparx brand, the closed footwear. Because season has just started. So last 6 months it was more of open footwear. Now the season started for closed footwear. So let us see how this quarter, next quarter goes.
And so with the new capacity coming in now on stream and with the new product, the response being good, where do you think, what changes, assuming the market stays where they are, what is in your hands to drive demand in the market from closed footwear perspective? Is it the competitive intensity is very strong? Will you add, do more promotional activities on the ground, spend more on brand ambassadors, to gain market share? Because assuming the market stays the way it is for next 6 months to 9 months.
So whatever you have said, all activities we are in the process of doing, be it spend on BTL, ATL, driving more, launching more articles, doing NPD meets, distributor meet, retailer meets. So everything is because this is Q3 is a season for closed footwear. So all activities are aligned to get the growth in this quarter and next.
But for, winter is just around the corner, so your primary push would have happened in the month of October. So if you can just share how has been the October month's progress for closed footwear, it will just help us understand how the underlying growth is coming for the season.
Since you have mentioned before that there is a lot of competitions, unorganized and organized have entered in this category. So we are seeing like a lot of discounts are being offered by unorganized and other players who have entered in the market. So it's not going to be too easy to, win this market. So let us see how this 2-3 months goes.
Understood. Thank you so much, sir.
Thank you. The next question is from the line of Harsh from Marcellus. Please go ahead.
Yeah. Hello, sir. So I see that there has been some change in the top management, and Mr. Shravan Kumar Singh ceases to be the KMP of the company. So just wanted to ask, like, does he continue to be an employer at Relaxo? What really happened? And have you identified a replacement for him?
He has come, he's not KP, he's in senior management list. So he has joined as a new product development head.
Hello?
Yeah.
So someone else has joined as a new product
Kumar
development.
Singh is with us. He has joined as a new product development head. He is part of senior management.
Hello. Hi, this is Ankit Jain, Company Secretary. I just want to update that due to some internal change in role and responsibility, Mr. Shravan Kumar Singh has stepped down under the senior management category, but he will be continuing as NPD head of the company. This is the internal decision of the management. But he's continuing as VP NPD.
Okay, so just the role of VP NPD has been shifted from being a senior management role.
Yeah. He's not in a senior management list, but he's a part of company only. He's the head of the NPD.
Okay, got it. And sir, after taking the price cuts last year, we have seen that we have gained market share, especially in the flight and Bahamas category. Do you reckon this market share gain story will continue in the ensuing quarters as well?
Yes, definitely it will continue. And we'll gain market share. Correct.
So to that extent, the volume growth will keep on coming, right? I mean, in the next quarter as well, in spite of the industry being a bit tepid right now.
See, whatever, like I have mentioned before also, last price cut rationalization was in September. So this kind of volume will not be there. Now value growth will be there. So volume growth is 27% is, I don't think so in next 2 quarters. 15%. Maybe 15%. Not that much high because the gap was in first 6 months.
Okay, got it. Yeah, thank you, this was very good, sir.
Thank you. The next question is from the line of Akhil Parekh from Centrum Broking. Please go ahead.
Hi, thanks for the opportunity. So my first question is, what could be the possible reasons for the demand weakness? Now, given that we have already taken price correction and it's almost 2 quarters now. So if you can highlight like broader reasons probably why the demand continues to be weak in our.
So consumer sentiment has been sluggish in the mass segment, and that we are witnessing across the country. And whole footwear category, we are seeing that the sentiments are not that great. So that's why that if the industry does not grow, then there will be little challenge. And we are seeing this because of monsoon, inflation. That rural market is definitely not responding.
Okay. So that I understand that the sluggishness is there in mass segment, but unfortunately none of the companies have been able to clarify like what are the clear reasons why we are seeing this pressure, given that the inflation has already started to recede.
Yes, but the demand at rural market should also be there, no? We are seeing that walk-ins of consumers are not that, which was before. So maybe the discretionary spend at rural level is not there. We can assume that.
Okay. But has that started to improve now, given the festival already started? Do we see that improvement now in the month of October?
It's too early to comment upon it. We are waiting for this season. This is important.
November things may improve.
Maybe November, December things may improve.
Okay, sure. Second, if you can please update on the DMS 2.0 implementation, which we have been talking about since last few quarters. Have we seen any how far we have reached in terms of implementation, and are we seeing any positive impact? Because one common feedback we were getting is the wholesalers were undercutting on pricing basically. If you can just highlight something on DMS 2.0.
So DMS 2.0 now, 50% of our distributor we have implemented this 2.0, and our plan is in next 3 months we'll make it 100%. Regarding price cut by distributor, it is we have not seen that, but maybe it's not in the DMS that they can cut the price. DMS just to get the inventory and how we can do secondary with them and align our schemes accordingly. DMS not implemented to control the distributor discount to the retailer.
Secondary.
Yeah, it is mainly to drive the secondary and have the control how things are going.
Thank you. The next question is from the line of Onkar from Shree Investments. Please go ahead.
I just wanted to know what are the export percentages of the revenue currently, and what kind of scope do you think you have, and the margin profile over there?
Yes. Yeah. In this quarter also, or in the H1, if you say, we have around 4% contribution, and we expect to have this kind of percentage maintenance in future as well. Maybe a little bit we can have more because the growth is little better compared to other channels, so we will be able to get little better percentage as a contribution.
So just wanted to know what is the margin profile over there as compared to the domestic market?
It is in line of same like what domestic we are earning in the same lines. We are earning margins in exports as well.
So they are same, right?
Yes.
Okay. Maybe given the capacity utilization at 63-64%, isn't it possible to push exports a little bit given the push of the government to the sector as well?
Yeah, we have been doing that because whenever we have started the export, we have been doing in our own brand. So wherever we are putting our products in whichever markets, and we are getting good traction, and we are able to get sustained growth in consumer pool as well.
And what's the percentage of online sales currently?
So we are doing roughly around 12%. It's a contribution of online and new channel.
Okay. And how it has gone up or gone down since COVID?
So if you compare with the last year, it is same as what I was talking earlier also, that industry is not doing, they're also feeling the pressure. So the growth rate is same. It's not that we are able to grow more. Okay. So however, we are adopting a cautious approach also in this e-commerce because it's a very important channel to drive future growth.
Okay. Thank you.
Thank you. The next question is from the line of Jaspreet Walia from Clockvine. Please go ahead.
Hello. So thanks for taking my question. So what has been the growth in the Sparx brand in the first half of FY24?
It is mostly hello. Sparx brand has not grown. It is just because the competition intensity was there. Some of the segment like SFG category has grown, and now if festival season is starting, were delayed also. Now November onward, we are optimistic that this will grow.
First half sales are broadly flat, zero growth YOY.
Nominal, I mean maybe 3-4%.
Okay. Got it, sir. And what are the plans to increase the number of EBOs in the second half of FY24?
You know, we are having a little cautious approach. We are doing to improve the planogram, improve the consumer oriented friendliness, training the staff, and also trying to find out how to improve the efficiency of our retail outlets. And then we have a plan for expanding the network, these retail outlets.
Okay, sir. Got it. Thanks, sir. That's all from my side.
Thank you. The next question is from the line of Archana Gude from IDBI Capital Markets. Please go ahead.
Hi, sir. Just one question from my side. So what is the revenue on the geographic basis, and what are the efforts you are putting in to increase our market share in South?
So if you see, we are doing 45% coming from North Zone, followed by East Zone of 22%, then West 20%, and 15% is South.
Sure.
So regarding South market, there is a challenge of growth because the demand is subdued, specifically in South market.
Mm-hmm. So that would be for both the categories, open and closed?
Yes, correct.
Sure, sir. Thank you.
Thank you. The next question is from the line of Sachit Trivedi from Trident Capital. Please go ahead.
Hi, can you hear me?
Yeah.
Yes, Sachit, please go ahead.
Hi. Thank you so much for taking my call. The question I have is that in a previous earnings call, you had indicated that Sparx revenue will go from 400 crores to around 1,000 crores over the next 2-3 years, which I think was around FY26. Is that still something in your plan? And if yes, then how do you plan to execute towards this goal?
Though this year has been a little challenging, but our focus on premiumization is particularly in Sparx category and particularly on shoes. And we are getting, this year we are into a lot of premium articles in Sparx, and we are getting a good traction. Based on our experience, we are focusing on this and likely to grow, but not this year. It is a year of stabilization and improvement and learning, and accordingly then we'll open up our retail outlets also. We will utilize e-commerce also. The things will grow accordingly.
Okay. Your other expenses have gone up 24% year on year. I'm assuming this is sales and marketing and promotion. Is this to help the Sparx brand, or is this for everything, all the product categories?
All brands are being advertised. Marketing expense trends are in all brands.
Okay. Now, in terms of your distribution channels, you have the MBO, you have the EBO, and you have the online channel. Do you think you should be looking at a differential pricing across these three channels, given that the customer that comes to your e-commerce channel is very different from a customer that comes to your MBO channel?
So if you see, we instead of having different pricing, we have different brand offering. So the Sparx is more relevant for EBOs and online because it is more than 1,000 MRP. And for the mass market or MBO outlets, which are 1 lakh outlets across India, for them we have Hawaii and we have Flight and Bahamas brand. So we have segmented brand according to the price rather than giving different discounts.
Got it. And then one question on your MBO market, particularly in the rural segment. Should we think of it as a consumer discretionary spend, or is it actually an important spend? Because if somebody's chappal is broken, then they need to replace it. And then the question is, why are they not buying a Relaxo brand to replace their chappal and going for something else?
See, what we have seen is that because of inflation, their visits have been a little reduced. So that's why what we are seeing is that the payments are not coming from the distributor and from the retailers. So because of inflation and their discretionary spend going down, so they are little selective in buying. That is the trend from last 6 months, but we are hoping that this will improve because of festive season coming and stabilization of prices are there, raw material has been stabilized. So there should be an uptake in the demand.
But that is assuming that this is a consumer discretionary spend. And I'm wondering if in the rural markets, this is actually a consumer staple item.
So if you have seen, we have grown in volume. So we have definitely gained the market share there also. But that Sparx is the category where we are seeing that the spends have, because it's more of discretionary, there this buying has been low.
Sparx is discretionary, but your Relaxo brand, Bahamas and Flight, particularly where you are selling to the rural, and many times in the call you have mentioned that that is where you are seeing a slowdown and you are hoping the festival season will see an uptick. And I'm challenging that part and asking if actually a Relaxo chappal is a consumer staple item for that market.
So we agree with that, but overall market share also has been growing. No? We are growing in that space. But the industry also has to grow. There should be huge demand from the consumer side. So all categories will grow. We are not facing any challenge in open footwear.
Okay. All right. And how are you tracking the success of your different programs and initiatives that you have currently put in place? What is the number, what is the metric that you track on a regular basis?
Can you repeat your question, please?
How are you tracking the progress of the various initiatives that you have put in place right now to get back, some of that revenue growth? What metric do you follow very closely?
Through DMS, we are able to know how many retail outlets are being served. So month after month, we see category-wise, region-wise. So that is the parameter we see. The more retailer our distributor is able to serve, so that means our reach is increasing.
We keep on monitoring the reach of our SOs also, direct reach we talk about, that they are visiting 60,000 outlets. So that has been monitored every month. How productive the calls are, what are the orders they are taking, how they help by secondary, how we are fulfilling the demand. So it's a monthly process.
Okay. All right. Thank you so much and good luck to you.
Thank you. A reminder to our participants, please press star and 1 to ask a question. Ladies and gentlemen, as there are no further questions from the participants, I now hand the conference back to the management for the closing comments. Thank you, and over to you.
Thank you all for joining the call. This is all from our side. Looking forward to joining you again. Thank you very much.
Thank you very much. Ladies and gentlemen, on behalf of IDBI Capital Markets and Securities Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.